please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, a minute left for pre-opening. The SGX Nifty is down about 38 points. Prakash Diwan now joins us. Prakash, good morning. Let's start with a couple of stocks where we have seen a decent bit of correction and whether you would want to buy them. Let's start with, say, Reliance.
Not yet, Anuj, because you know what I'm anticipating is that the last round of sell-off, or the subsequent round of sell-off would possibly come into the large caps. And then that's why if you see, we've had this oscillating pattern between the mid caps and the large cap sell-offs. So I think Reliance and some of the heavyweights would still have to give way for the market to start and to get into that consolidation phase. I continue to love buying into those mid cap, small cap companies where the correction has been so severe that the fundamentals haven't changed so dramatically downwards, and that's where the arbitrage is. So I think it would still be favorable to go into the mid caps which have lost more ground.
That's a brave yet discerning reply, Prakash. We will come back to you for more specific ideas on which mid-cap stocks. The Sensex is starting with a 1.7 cut. It may not be that bad. This must be freak because Nifty is starting with just about a 0.5% gain. Looks equally freakish at this point in time. Now up 0.6, 0.5, thereabouts. So 10,140. It's that level. I think we just have to allow the markets to settle down. 65.16 was what the dollar cost when we went to bed yesterday. Let's see whether that's showing any signs of further weakness or whether it's able to overcome that weakness that it showed yesterday. Yesterday, of course, all risk assets were falling. Okay, the rupee's gotten a little weaker. The dollar is more expensive by another 5 paise. And 65.22. So weakness is definitely showing, albeit only a tad bit in the rupee market. Now both the indices are showing a little bit of more believable, credible activity. The Nifty is down 0.6 and the Sensex is flat. So, well, Axis Bank is starting with big cuts. I doubt that will be carried on when the market actually starts trading. And then you have Coal India showing some negativity, Vedanta, Tech Mahindra. I don't know, it's still not worth reading. No, it is not worth reading. Perhaps GSPL, you would want to take a look at that. They're going to be buying 28% stake in, to bail out their parent GSPC. So GSPL is under a bit of pressure right now, down about 1.5%. But we'll come to that in a bit. Prakash, we were discussing about the stocks to buy. The space that did the best last year was metals. But this year, metal stocks have fallen the most. So names like Hindalco, Tata Steel, etc. are all down about 15%. Is this a time to buy metals or do you think you would wait a bit?
No, so let's figure out why, on a macro basis, the metal stocks have got into pressure, Sonia. One is that, globally, this whole trade war trigger is something that large companies in the commodity play and the metals play get worried about because it can upset pricing power that they've just started regaining. But if you go down one step into the secondary metal players and where, they actually will benefit from cheaper supplies of basic raw material, and when they convert it into process it into some value-added products, there's a huge benefit. So I would believe that that's one of the reasons why some of those smaller players are not getting impacted as much as these larger pure play steel players are or metal players are. So I would go into that. So let's say a Sunflag Iron, which is into automotive steels, or let's say a very small company like Kirloskar Ferris, which we spoke about a week back, which is still holding ground. Which is into casting. So, that's where you will have to look at. So, it will throw up opportunities while Tata Steel and Vedantas could suffer even more. 16% is probably not enough. It could see a 25% kind of a cut from the recent peaks. Okay. Well, Prakash, just coming back to, we have an important news to address. GSPL, that stock is in focus because the company will buy a 28.4% stake in Gujarat Gas from its parent GSPC. Manish Seth, the CFO of GSPL, joins us on the phone line with details. Mr. Seth, good morning. Thanks for joining. Well, the market is reading this as an effort on your part to bail out the parent GSPC. Is that right?
Well, I don't think that's the right perspective. You see, GSPL is already a promoter of GGL, Gujarat Gas, and we are a complementary business. We enjoy a lot of synergy in the group. And GSPC, yes, it wants to cut down its stake in GGL, and it comes at a time when we are also enjoy a lot of synergy. So it makes a lot of sense to buy this asset at this point of time. So I don't think from GSPL's perspective we have anything to do with the.
How much will you be paying? How much will you be paying to buy the asset?
So roughly it should be in the range of 3,200 crores.
And how will you fund this 3,200 crores?
So we have internal accruals, plus we'll be borrowing money in the short term, then which will be refinanced subsequently.
That's the point, Mr. Seth. You know, since this is all a group company, you would have had synergies anyway, but now you will have to take on debt. So immediately how much of a EPS hit will that be?
Well, you're right. In the short term, we'll have to take some debt. In fact, if you remember, when we took over GGL from the erstwhile BG, the same thing had played out that time also. Yes, in the short term, any buyout would require some amount of debt infusion. But given our strong balance sheet and strong cash flows, I think we can easily take that debt. And I think in the past also, a lot of investors have been telling us that it would make better sense if GGL were to be under the full control of GSPL.
Okay, but so what will be the gains if you take over? How will it add after all the debt is over? What extra will it add and by when?
Well, see, broadly, I can tell you that GGL currently, from the last figures, roughly 6 million is the gas that they transport. And with the new circles that they've got and the new circles that they're bidding, I think volumes can easily double within the next 6 to 8 years. So that's the order of volume business. And all that volume which goes through GGL is automatically comes into GSPL network. So I think I think those numbers will speak for themselves.
In terms of a debt, how much will the debt on GSPL's books be post this transaction?
So right now we have hardly any debt. We have only 250 crores of debt. So after this debt will be roughly 3,500. We'll be still below 1:1 debt equity.
So, you know, after this takeover, or rather this stake buy, it's already become a 54% subsidiary of yours. Will there be any interest in buying more stake?
No, I don't think. See, basically the stake that was available in the market was this. So this is what we were interested in.
Okay, you said you will be at 1:1 debt equity even after this.
Below 1.
Below 1:1 on GSPL, right?
Yes.
Okay.
Yes.
Will GSPC get reverse merged with GSPL at any point in time?
I have not heard any such thing.
All right. And what will the debt on GSPC be? What is the debt currently on GSPC?
Well, I won't be having those figures right now.
Okay. No, but now with Gujarat Gas becoming your subsidiary, that will have some implications on your balance sheet, isn't it?
So it was already an associate company, so its figures were already reflected in our balance sheet, so they will continue.
Okay. Dividend-wise, any gains you think?
Pardon?
Dividend-wise, you will have more gains?
Yeah, surely. Gujarat Gas has been paying healthy dividends. In fact, we'll get a set-off of dividends because the dividend, after it becomes our subsidiary 50% plus, we'll get a set-off of the dividend that we get from our subsidiary and which we pay to others.
Okay, just one more question. You're currently buying 28% stake. Will you at any point in time look to buy more?
Well, as I said, I don't think right now we are looking for any further stake.
Okay, sorry, I didn't hear that. Just one more question. Since your debt will pile up quite a bit, we're looking at higher interest costs as well, right? What would the average be right now? I mean, you're hardly sitting on any debt on GSPL, but going ahead, what are we looking at in terms of higher interest costs and the impact that it could have on overall earnings?
So as I mentioned, roughly 300 crore, 250 to 300 crore will be the interest implication on account of the debt we'll take.
And that would be for it likely be a 5-year debt or something like that? So you'll have a 300 crore coming in?
So immediately we'll be borrowing for short term, then we'll look for replacement of that fund through our internal goals plus debt.
Okay, Mr. Seth. Thanks a lot for your time today. That's GSPL. Prakash, quick thoughts on this whole story and both GSPL and Gujarat Gas, if you have a view.
So I don't see any great benefit to GSPL on account of this. I think it's more to do with the financial restructuring that helps GSPC get out of some sort of investments and monetize its assets. But Gujarat Gas is something that could now start getting some benefit, and there'll be a full throttled expansion that both of them put together could do, which works very well for Gujarat Gas, because that has been stifled for some time in the last 2 quarters when we see the numbers. So I think Gujarat Gas would end up being an indirect beneficiary in the medium term, but right now there's no trigger to buy any of these 2 stocks.
Okay, the pre-open rates have settled, by the way, and it looks like for starters we'll have 1:4 advanced decline. The mid-cap down about 0.6%, Bank Nifty down 110, the Nifty down about 42. Ashwini, is there a first trade here, and what would be your 9-10 call?
See, it's gapping down, but you already have a lot of downside in the market. So I would think that you would see some amount of strong pullback happening. Now, whether or not it happens, the opportunity will be there if we start hitting 10,140 or say 24,400 on the Bank Nifty from where you get short. I think overall don't short into the gap down, because today you could have moves on the other side also. As far as stock calls are concerned, I think Mindtree you can go short on with a stop at about 790, target of 755.
Okay, Bank Nifty you want to short around 24,400 levels. Nifty closer to 10,100?
10,140.
Okay.
Because, once this short covering starts or some news flow starts, 50, 60 points will happen at the blink of an eye, because so much short covering will suddenly come in. So you want that sort of short covering for fresh shorts.
What about something like Tata Motors, Ashwini? That stock has been making new lows every day. It's now lost almost 25% of its value this year. Does it make sense to take a fresh shot on a name like Tata Motors anytime soon?
See, obviously, this is in a bear market. There's no correction here. So each time you get a bit of rally or something positive comes out, I think this is a great play on the short side. While it's a bit overextended, any rally towards 370, you can go short on. So far, there are no signs of turning.
Okay, actually, Manisha is waiting by, but I have just one metal question, which perhaps even Manisha would be interested in. Sudarshan, Vedanta, I don't know why it's starting with 7.3. That's the next
21 rupee dividend amount. So that's
okay, so then it's actually starting flat. But at current levels, does that become a buy at all, Sudarshan?
Vedanta is a buying opportunity if you are an investor, not for a trade, but it's an excellent buy at current levels. Don't expect a big decline in this one. Tata Steel, Hindalco, other stocks that will fall much further.
Okay. All right. Thank you for that, Sudarshan. Let's get to the commodities trades itself and what the cues are overnight. Manisha Gupta joins in. Morning, Manisha.
Morning, Lata. Thank you for that. Well, the metal cues are definitely coming in on the weaker side. The global equity sell-off is something that, again, is weighing onto the markets. You also have seen some strength in US dollar as the markets look forward to the Fed monetary policy outlook today in the evening, tomorrow rather. But if you look at the Shanghai markets right now, it's a fresh 4-month lows that we are seeing in case of metal futures. You have the iron ore prices yet again down by 2.5%. Steel is down by 2% as well. If you look at the first 2 months of this year, the steel prices were up by double digits. But where we stand right now, steel is down 5% for 2018. If you look at the month of March, the iron ore prices have declined by 15% as well. Copper is down by 7% in this year. And that list pretty much goes on because every metal is trading in the negative for this year. The gold prices is the only bright space that you have right now. The decline in equities ahead of the Fed policy, you have seen some buying come in here. There is some buying that you are seeing for the crude oil prices also, while the macro fundamentals are not so strong, but it really is the statements that you have seen come in from Britain, France, Germany, which have proposed fresh sanctions against Iran. You also are looking at Saudi Arabia saying that they will develop nuclear weapons if Iran did. So that is what really seems to be leading to some premium that you can see in the crude oil prices on your screens.
Okay, thanks a lot for that, Manisha. We still have 2 more minutes to go for the markets to open, but the market remains the big focus this morning, soon after market opening, right? Abhay Ledgerwala of Deutsche Equities will join in to chat about the fundamentals and the technicals of the trade are lined up right after that with Lawrence Belanco of CLSA.
Not just that, we also have some important corporates joining us. Bhaskar Bhatt of Titan will be speaking with us at 9:45 a.m. Talk about the latest in the sector, and Dabur's Sunil Dugal joins in at 10:15 to talk about the pickup in demand. Okay, so that's an important array of guests waiting for you. At the moment, we'll have to worry about how the markets might open. Prakash, that pointed question, you said this is the time to buy mid-caps. Which ones?
Yes. So, you know, if you see some of the stocks that are not giving way, and that shows why there's so much of demand. One of them is VST tillers. We've discussed this quite often, so I'm not going to explain why this is so promising. But the only oasis of sorts in this global sell-off seems to be that our Indian farm sector, the rural sector, is continuing to get nurtured by the government, and that's where the spending will happen. And one of the bets that I want to take, you know, on the basis of the fact that we're getting into a very well-contested election phase for the next 18 months, is regional newspapers, Lata. I think they are the ones that will definitely outperform the pan-India, the national players, for the simple reason that the national players are facing a lot of heat because of the cut down in government spending, whereas the regional guys will probably benefit out of that.
Okay, that's interesting, regional newspapers. But we have just 30 seconds left for the markets to open. Ashwini, just a quick comment on any favorite bank that could be under pressure today and could perhaps be shorted?
I think yesterday PSU banks have restarted downside, so maybe Union, BOI, all of these guys you can go short on.